the management of Garden Reach and Shipbuilders, because that particular counter is in focus on back of its earnings. And we are joined by Mr. P.R. Hari, who is the CMD at the company. A very good afternoon to you, sir. Thank you so much for joining us on ET Now. And firstly, let me directly dive into the numbers. And if you could tell us what have been the key revenue as well as profit drivers for your company in the quarter gone by, and also what were your margins in Q3, and how do you see the margins trending ahead, given the fact that your execution levels will also ramp up going ahead?
Thank you, Cheryl. A very good afternoon to all the viewers. Before I answer the direct question that Cheryl asked, I'm presently at Bangalore for the Aero India, and the theme is a runway to a billion opportunities. And right now, the defense sector has got a billion opportunities. Now, I'm also happy to inform the viewers that we have managed to maintain the tempo that we gained during the first and second quarters of the current financial year. And the results of the quarter ending and the 9 months ending at 31st December 22 have been very encouraging. As a matter of fact, our revenue from operations and the profit after tax has been the highest ever in the history of the company, for a single quarter and for a 9-month period. Coming to the revenue from operations, we have gone up from 1212.90 crores to 1960.90 crores. That is registering a growth of 748 crores. That is 62% growth in a 9-month period. Similarly, our total income has gone up from 1,333 crores to 2,092 crores, a 57% rise, and the profit after tax has gone up from 142 crores to 172 crores. That is a 21% rise. So on the whole, the financial results have been very encouraging, and the earnings per share has gone up from 12.42 to 15.09, a 21% rise again. Now, coming to the margins that Cheryl had asked, we have been, during my earlier interactions also, I had assured the investors that we'll be maintaining a margin above 7.5 to 8%, and we have, over the last quarter, all the margins have marginally gone up, actually by 5%. The EBITDA margin has gone up from 12.32 to 12.96, and the PAT margin has gone up from 8.12 to 8.53. That is 5% increase has been registered. And considering our present project maturity and the production levels that we have achieved in all the current projects that we are executing, I'm very confident of maintaining this similar margins in the future also.
So, in a defense business, it's always about orders that you get and how you execute. So what is the focus on that front? How are you targeting your completion dates? How are you trying, in this environment where supply actually of raw material, of labor becomes a big issue. Sometimes money becomes an issue in terms of what you had thought it was earlier, and what, with the hyperinflation that we're seeing, what sort of impact it could have on your book. So how are you managing execution levels, to be higher than what some of your peers are, giving to the government?
See, our current order book, that is the order book as on 31st December 22, is 22,242 crores. And this comprises of 6 projects, that is 3 projects for Indian Navy comprising of 15 warships, one for cooperative government of Guyana and one for government of West Bengal, both export orders, and one project for the government of West Bengal. Now, all the naval projects except the P-17 Alpha project has been won on competitive bidding. That means the cost is fixed. And all these contracts, the execution timelines are very, very clear. I mean, just to give you an insight into how we manage the projects. The P-17 Alpha project, we expect to complete by 2026, that is FY27 mid, will be able to complete. And right now, the first ship of the project has already achieved a 50% production maturity. That is, physical percentage of construction is plus 50%. And the other ships are very closely following. Similarly, the ASW Shallow Watercraft project, FY27, this is the 8-ship project, will be completing by then. And also, the survey vessel project is a 4-ship project for the Indian Navy. We will be completing by FY24. So this is, in a nutshell, how we plan to execute the projects. Now, coming to the rise in the raw material price. Now, in a conventional warship, nearly 65% of the project cost comes from material. Now, as our customers have awarded this contract to us on fixed price, we have already concluded the contracts Rather, we have placed the purchase orders with all the major OEMs. So there's no question of inflation affecting the pricing. The raw material and the labor, these are two areas which are susceptible for escalation, and this has already been catered when we take the orders from the customers. So I don't see much of an impact on both these aspects on our ongoing projects.
Right.
And also, please
Yeah,
go
go
ahead.
on, go on. I'll let you continue and complete the point that you were making.
Okay. Right now, I mentioned that I have an order book of 242 crores. And in another month or so, that is in the current financial year, we expect another order from the Indian Navy for a four-ship next generation OPV, that is around 3,400 crores. So, what my estimate, considering the overall progress of all the projects, I'll be able to maintain an order book position of around 25K by the end of this financial year.
Right, so that's a pretty optimistic one coming in from your end. But let me ask you the question on the fact that you're planning to increase ship repair income to 30% of the total revenue, which currently is actually less than 10%. Are you on track to achieve this, and what are the steps that you're taking with this regard?
See, Cheryl, at the outset, we at this juncture we don't have any plans of increasing the revenue from ship repair to 30% of our overall revenue. Our core business is warship building and domestic warship building. Majority of our revenue, that is order book, and in turn the revenue comes from warship building. Yes, ship repairs is an attractive profit generating vertical, and we have focused on that. And the target, since you asked me the question, is to have an exponential growth, but not to the tune what you mentioned, to around 30%. I'll be aiming at around 15% in the coming 3 years. Towards this, we have set up a separate vertical, and as of now, we are executing projects for Indian Coast Guard and also for commercial ships, that is the refits.
All right, sir. Thank you so much for taking out time for us. Always good to get perspective. And thanks for telling us about your plans. How do you, think about your order book, and how execution is something which you're looking at. Let's go across to now